Well, we have a lot of hot news going on this morning. Let me start here. Tesla sales, the number one issue is the Model Y. The Juniper did not come out, and I think there's an Osborne effect from Cybertruck. If you don't think, let me know in the comments below. If you don't think that the huge number of Cybertruck reservations aren't also Model Y potential customers, I've got a bridge that I'd like to sell you. I don't think maybe Elon even had this in his equation as he was planning the Cybertruck ramp, that we would end up with 2 million or whatever it is reservations, and that people would be waiting years to get their Cybertrucks who might have been possible Model Y buyers. If you think it's not true at all, I've already mentioned that in my household, we're going to get a Cybertruck and possibly replace our Model Y. And we're a city dweller who doesn't have any use for a truck. We're buying it for the fun of it. So let me know in the comments below. I'd like to hear just some thoughts with regard to whether you think there's an Osborne effect impacting Model Y sales in the United States this year. Well, speaking of sales of vehicles, we've got all kinds of information coming in this morning from China and from individuals who are responding to the China numbers. China reported a very strong 17,500 insurance registrations for the last week. This is the best week of 2024 so far, and that included 6,000 Model 3s. This is the highest number since the Model 3 launch last November. Of the Model 3 Highland, the revised. With one left in the quarter, Tesla China second quarter is down 7.2 year over year and is up 14% compared to last quarter. This is all from Gary Black this morning. We expect Tesla overall second quarter deliveries of 420,000. This is, again, Gary Black, with the second quarterly decline of about the same amount. So that's where Gary Black's coming in, 420. We've got from AJ this morning. He says, I'm giving you my final Tesla second quarter delivery estimates. He's now coming in at 412,919. That will make him the lowest of anybody that I've seen so far. Most folks are more in the 416, 420. Anyway, we'll go down here and look at a couple more. He says the primary driver strength in the US, China, and the rest of the world. Strength. Come on, AJ. I wouldn't call any of the numbers strong. I would call them flat to slightly up maybe, but weakness in Europe, yeah, we can all agree with that. James Catt, who along with AJ and Brian White are the most accurate predictors. James Catt is, he's 425,000 after this big week. He says he was at 420, but he's increasing his to 425. So we've got AJ now down at the bottom. We've got James Catt at the 425. We've got other people around 420, 415, and then we've got Brian White and the street up in the 440 range, okay? So we'll see how all this plays out. Maybe Brian will have another chance next Monday to give us a number just before. He might have changes in his number before that. Okay, so then Justin, oh yeah, this was okay yesterday on Herbert's channel, a very good video if you want to go watch it. It's about an hour and a half long. I put it on like double speed. Justin, who has no last name, but who resides on X under SMD Capital 88, was interviewed by Herbert yesterday regarding he gave an extremely thorough analysis of the future revenues and stock implications for CyberCab. They had CERN Basher on also and on the same program. Of course, CERN has done a very thorough analysis. You've seen it on this channel if you watch all the time. CERN stuff is outstanding. If you're not listening, we do usually 1 or 2 CERN Bashers a week, and the numbers have not been fantastic. You should be watching those just as a matter of course. No matter what my title is, no matter what my thumbnail is, just plan to watch CERN Basher every week. This stuff is extremely useful. That's why I've got him on here. Anyway, he also put together this analysis. CERN Basher was there, seemed to really appreciate and thought that was thorough and interesting and brought up a couple of things maybe CERN hadn't thought of. But he did the entire thing in chill mode, trying to keep to what he called a conservative reality. In the end, he thinks that when the street gets it, The now value, today value of CyberCab alone should be about $200 a share. He also provided a list of catalysts that he thought might trigger the street joining in the game. Most of them were pretty obvious, in my opinion. I still think the relative catalyst is either Elon saying that it's level 5 and that Tesla is now liable for accidents that caused by the car when FSD is engaged, or the other idea that we've talked about for so long, that Elon takes his famous coast-to-coast trip with no interventions while playing a video game and hooked up on Starlink mini dish. So I think that one of those two things would get the street to pay attention. You know, Elon, he loves to do big dramatic things. Those two things will be very dramatic. Neither one of those were on the list. Anyway, let's see. The immediate value. My other favorite has nothing to do with a new vehicle, but rather has to do with the immediate ability of Tesla's current fleet to become owners of small business by hitting the app and putting their car to work. That is the other way that I think that we could see a big catalyst, is if the 8.8 announcement says, okay, guys, you're on. You can go for it. All of you guys that are driving around in Model 3s, Model Ys, etc., that have FSD, just hit your app right there. Just push that button. That's what Elon said. Just push that button and your car will take off and join the fleet. That could be, a number of different ways that the catalyst could happen. One way that was suggested on the list, and that I think is correct, is if there really is the entire detail, everything from what they're going to charge, when it's going to launch, when you and I will be able to put our cars out, etc. If all that stuff is announced on 8.8 so that it's super, super clear, that could be a possible catalyst. This is from AJ again. Tesla launched a free FSD transfer for people taking delivery of a new vehicle between now and August 31. This is on top of any other incentives. You get to keep your existing vehicle, or you can sell it yourself. You don't have to trade it in. You just have to give the VIN number, and Tesla will transfer your FSD from that VIN number to the new vehicle. So he thinks a meaningful number of people will use this opportunity to upgrade. We may see some meaningful demand pull forward in the US. The window for such upgrades appear to be increasingly closing. There may not be too many more opportunities in the near future. So what I'm hoping for is that after they really start rolling out a lot of Cybertrucks, so maybe middle of next year or something, maybe there will be another opportunity for people in Cybertrucks, not even as an incentive, just as a kindness. Of course, you know why I want that to happen. Okay, we've got this from Bar Chart. He says, Uber insider trading alert. CEO Dara, never mind, sold 1 million shares last week for a total value of $70.4 billion. That's about half of his outstanding, about half of what he owned. And last month, he sold 30% of what he owned. People are suggesting that that was from Lord Pretty Flacco. He's saying he sold 30% last month. So some people are saying he sees the handwriting on the wall. Robotaxi's coming. It is going to destroy Uber, and he knows it, and that's why he's selling. We don't know that for a fact. That's just speculation. Did you know, this is interesting, 160 of the S&P 500 stocks are showing earnings growth of 25% or more. So I'm saying this because it's in such contrast to this idea that the top 6 are doing all the work for the entire S&P. Well, that's one way. Statistics are fun. You can play with statistics a lot of different ways. So you can make it look like the S&P, what a terrible time we're in here, where 6 of the stocks are doing all the work and the rest of the S&P is only up 3% for the year. Well, that's because, 350 maybe are down or not doing well at all. Oh, but here's 160 that are actually up 25% or more. I thought that was an important statistic to look at. Well, you guys all love Barron's notes because he's, I guess, the #1 investor in Tesla. He says, previous instances when Tesla shares have underperformed during a discrete period, they have shortly afterwards reflected the strong growth of the underlying business and the stock has appreciated considerably. We believe that will be the case again, though we cannot guarantee it. A significant decline also occurred at the end of 2022. In that instance, investors have become concerned about a host of external factors. Investors believing the company founder, visionary, and CEO Elon Musk was distracted. They also believed a weak Chinese economy emerging from COVID and U.S. governmental policies would curtail the purchase of Tesla vehicles. These fears proved to be overblown. As the company achieved milestones in the succeeding year, the stock subsequently doubled over the next 12 months. Today, investors are again concerned. They believe there is an increased competition from Chinese automakers who are supported by a protectionist government. They worry about product level margins after announced price cuts. They're skeptical about whether the company can achieve full self-driving and wonder whether there's even a feasibility of the upcoming robotaxi. They debate if a mass appeal vehicle can't be produced at scale and profitably. The 2.5 vehicle or the eventual Gen 3 car. Just like in late 2022, we believe investors' concerns are overblown. Electric vehicle competition will be present. The Chinese automakers make a good value product, but we believe Tesla's offering is superior and will garner a meaningful market share in China. We also believe that Chinese OEM advantage will be minimized outside of its home market because of tariffs. We're already seeing traditional internal combustion engine manufacturers scrap their EV plans as plant conversion is too costly and their technology is inferior. They have instead attempted to fight for market share in the outdated ICE category. He doesn't mention, of course, hybrids. We also believe a lower-cost Tesla product will eventually be introduced and gain wide acceptance. Timing is uncertain, however, as the company attempts to develop both the new vehicle and fully autonomous vehicles in parallel. Elon responded to this article or this updated note by saying that he thinks the long-term return on Tesla stock should be exceptional. Well, he did say it'd be worth $25 trillion. just the robots. This is Randy Kirk, by the way. Hit like, subscribe, notify. We've got Brian White coming later today and Nicholas Gibbs. If you aren't watching the Nicholas Gibbs show on Tuesday night, that's another one. You got to watch Nicholas Gibbs on Tuesday. Just put it on your calendar. This guy is really smart. He's young, and so you might be like, he's just a young. No, man, this guy's got his stuff. He understands way more, I think, than you might be giving him credit for. All right, and then, Patreon, that would be really, really cool. Okay. The S&P Core Logic Case-Shiller U.S. National Home Price NSA Index covering all 9 U.S. Census divisions, reported a 6.3% annual gain in price. That's down from 8.3% the previous month. That's a year over year, okay? The 20-city composite posted a year-over-year increase of 7.2%, dropping from a 7.5% increase in the previous month. These decreases in terms of the overall price increase. This is a little complicated, maybe even especially the way they wrote it. What this is saying is that the price of housing, single-family dwellings, is still going up like crazy. There is no difference. It's a little bit different, month over month difference. Those are statistical anomalies potentially, but the reality is housing prices are still going up crazy. And this isn't going to help us get any cuts in the Fed rate. I guarantee you, this is another one of those ones that the Fed's looking at, and this is not going to be helpful. And this is happening when inventories are up, according to the headlines. Don't believe those headlines. These inventories are still at record lows, historical lows. Well, not record because they even got lower, but historically, inventories right now are extremely low. And you also have a lot of demand, pent up demand like crazy. Sales right now are not as good as they would normally be at this time of year. I've been explaining that for a week. Hopefully you've heard me explain it. I'm not going to go all through it again. We had high sales in the winter. That's going to sometimes result in lower sales in the beginning of the spring, summer market. I believe they will continue. We're going to see the consumer coming back with the interest rates being down a little bit. The consumers will be coming back in these future months, and you're going to see Inventories going back down to historic lows, not even just historic, record lows going into the fall. And then we'll see what happens over the winter. Very hard to know, but we could have another big winter like we did last year. Okay, now we got Larry Summers agreeing with me. He says the economy has normalized. Inflation threat is still real, and current interest rates are not enough to slow the market. Isn't that what I just said? Like 2 weeks ago, I did a big story on this. I said, look, you got to look at the market in a new way right now. The economy, you got to look at the economy in a different way right now. It has normalized after COVID. So you no longer look at the boom bust situation. You got to look at it as normal again. So you got to start paying attention. Well, you can do whatever you want, but the economy is normal again. So what are the normal factors that are influencing inflation? Well, the normal factors that influence inflation are government overspending. We have that times a jillion. The normal situation that influences, inflation would be a lot of demand and not a lot of supply. And you have that in the services, you have that in travel, you have that in entertainment, you have that in eating out. Will we see inflation continue to moderate? No, we're in a completely new situation. It is much harder to tell right now what to expect with regard to inflation. This is what Larry Summers is saying. So what he says is, he took an aim at the Federal Reserve strategy for defeating inflation, while also taking credit for predicting last year that the markets and policymakers were overstating the likelihood of several interest rate cuts in 2024. Of course, I've been saying since February, no interest rate cuts this year. No interest rate cuts this year. And I've been saying 35% chance of recession third quarter. I still think that's true. At an event staged by the Council of Foreign Relations in Washington, Summers said that recent data indicating a slowdown in inflation are somewhat of a mirage caused by the normalization of prices following the pandemic, a trend that he said markets shouldn't expect to continue. So given the magnitude of our fiscal challenges, I think there's a bit of excessive optimism about inflation. Summers said he was referring to recent trend of record budget deficits that he believed will continue to support demand and put upward pressure on prices. Summers added that the Fed is underestimating the long-term level of interest rates, known as the neutral rate, that will be necessary to keep prices from rising too quickly. It's not enough. You can't be sitting at 5.25 right now and believe that consumers and businesses are going to cut back. It's not high enough. It's normal. 6.8, 6.7% mortgages, normal over the 100 years. He says, my best guess is the Fed is badly wrong that the neutral rate is 2.5, he said. My guess is that the neutral rate is 4.5. Fed officials raised their estimate of the neutral rate to 2.8 earlier this month. The Fed's benchmark interest rate is currently 5.25 to 5.5. According to Summers, that monetary policy is not very restrictive, and investors shouldn't expect interest rates to fall significantly from here. You had one of the Fed people this morning saying she's still willing to raise rates. Traders in the federal funds future market see a nearly 70% chance of more than one interest rate cut before the end of 2025. I do not. I think maximum one. Okay, could be November, December. I think what we'll see is maybe one in November, but I'm still doubting it, especially with the numbers that came out this morning on housing. This is breaking from the Conference Board. The Conference Board's Consumer Confidence Index dipped in June to 100.4, with 1985 equaling 100. That is down from 101.3. The Present Situation Index, based on consumers' assessment of current business and labor market conditions, actually went up to 141.5 from 140.8 last month. These are all really marginal changes. However, the Expectations Index, based on consumers' short-term outlook for income, business, and labor market conditions, fell to 73, down from 74.9. That's a more substantial drop. The Expectations Index has been below 80, the threshold that signifies a recession, for 5 consecutive months. Confidence pulled back in June, but remained within the same narrow range that held through the past 2 years, as strength in current labor market views continue to outweigh concerns about the future. So you got a job? you feeling okay. You got 2 jobs, not feeling as good, but at least you're probably paying your bills. However, it says, if material weaknesses in the labor market appear, confidence could weaken as the year progresses, said Dana Peterson, chief economist at the conference board. Consumers expressed mixed feelings this month. Their view of the present situation improved, driven by an uptick in sentiment about the labor market, but their assessment of current business conditions cooled. Meanwhile, for the second month in a row, consumers were a bit less pessimistic about future labor market conditions. All right, the decline in confidence between May and June was centered on consumers aged 35 to 54. By contrast, those under 35 and those 55 and older saw confidence improving. No clear pattern emerged in terms of income groups. On a 6-month moving average basis, confidence continued to be highest among the youngest, under 35, and the wealthiest. Yeah, those making over 100. That's another theory I've been suggesting for a while now. We have 2 markets. We have 2 Americas, those making over 100,000, those family income, those making under 100,000, very, very different worlds right now. Consumers' assessment of current business conditions was on balance, slightly less positive. 19.6% of consumers said business conditions were good. That was down from 20.8, but 17.7% said business conditions were bad. That was actually down also. So way more people saying neutral. All right, let's go ahead and take a look at where the markets are now. What a morning. Holy mackerel, so much news. Okay, we have got Tesla, which was up early this morning, is now up even more and climbing. It's up 3.54, $3.54. The Dow reversing yesterday is now down 114. The NASDAQ reversing yesterday is up 154, and the S&P up 15.32. You've got the Magnificent Seven all up this morning, with NVIDIA reversing after 3 days of being down, up $4.01 this morning. Meta up $9 this morning, almost 2%. So very strong on the Mag 7. You have got, on the other hand, the Cathie Woods almost all down. Wow, what a beginning of the day. Where will the markets go? I can't remember ever seeing 100% of the Mag 7 up and almost 100% of Cathie Woods down. We have seen the Dow like this, where the Dow is down 0.29%, with the NASDAQ up 0.84%, S&P up 0.27%, and Tesla up almost 2% this morning, continuing to go up, probably based mostly on the China news. That would be my guess, but also based on what I was saying yesterday. We're seeing this now, this range move up a bit. We're at 186.14 now. We're approaching 190. We could be starting to take a look at that 200 level. That's in the face of the fact that there's a wide reporting now on the number being in the 120, 125,000 range, not the 144 that the analysts are suggesting. So that's widely out there now. You'd have to be have your head in the ground and not to see that number popping up here and there and everywhere. So I think the street gets it. I think what you're seeing now is some FOMO beginning to build over 8.8. Maybe a little bit of interest in the fact that there's maybe going to be a little bit of a better number on earnings, even with these lower numbers on units. All right, let's go ahead and take a look at the rest of the numbers. Let's go into the bonds. We have got the bonds this morning down 6, the 10-year down 0.6%. At 4.24, so remaining under that 4.25 level. You've got the 2-year actually up 0.8 basis point at 4.742. Now that's like exactly 50 basis points. You've got the 2-month up, call it unchanged, at 5.369. That is well over 110, like almost closer to 120 basis points now. Yeah. You can't make this stuff up. Okay, let's take a look at oil. Oil falling off after several years of gains, but only 22 cents. Similar Brent, 29. Texas Intermediate now 81.40. Brent 85.72. Natural gas down 1.85 after being strongly up yesterday at 275, 276. It is in the middle of that range. We have got gold steadying, it says. Well, it's down $7.70, 2336. I feel like it's been 2336 like half the time I look at it. Silver is down 1% this morning, back under $30. Copper down 0.94. By the way, read a big long article on copper this morning. It seems like the speculators got out ahead of the users. So the users actually, the reason for any kind of a commodities market is so that people that are actually using product can hedge their annual production numbers or what. So you could buy all your copper now by buying an option, and that helps you make your plans for your production all year at a certain cost. And then if the price of copper goes crazy, you've got your option that covers that situation. So people that, I used to do this with my purchases in plastic. So you want to, so those folks, the ones who are actually buying it because they need the options, they weren't playing in this run up recently. And so while there's still probably a very big deal long term, in the short term, the copper market said, no, we've got plenty of copper right now to cover what we need. And that's what's happening with the copper market, in addition to whatever that was about full warehouses in China. By the way, China uses 50% of all the copper in the world, just for a heads up. All right, we got the dollar very neutral this morning. You've got Bitcoin rebounding nicely from yesterday's big drop, up 2,172. Almost 62,000 again. So who knows? I have no idea. Just reporting. Okay. All right. Let's see here. We have got last thing here. Going back to Tesla is now $4.09, screaming higher this morning. Will we approach 200 this morning? Maybe we're going to go for 200 today. Who knows? I'm not predicting that by any stretch of the imagination. All right. So please, Brian White coming up later today, Nicholas Gibbs tonight. Believe me, both of these shows are going to be, I already know it's on the Brian White show, so you definitely want to watch that. You want to see yesterday's Brian White. We went around the world. We looked at every single factory. If you didn't look at that, here is the card for that one. You want to go back and check it out. And then Nicholas Gibbs, well, we don't know what we're going to be talking about. Well, we'll be talking about the good news of Tesla holding on to the gains today and going even higher. That will be the good news we'll be looking forward to. One last chance. You could go right now down into the description below. Check out Patreon. Hit the link. Go over and help out the channel. Be so nice of you. Thank you so much. And it's been great talking to you.